All right, good day. Hope that you're doing well. So in this video, we're going to be doing question 1, which is from your prelim paper, the 2024 Gauteng prelim paper. Now, in question 1, we're going to be looking at financial statements, and we're going to be preparing 2 financial statements in this video. So first, we're going to start with the income statement, then prepare the balance sheet. So now, let us start with the income statement. So now we are given this information, right, relating to our company, and our financial year end is on the 29th of February 2024, right? So let me just go to my answer sheet. All right, so on my answer sheet, as you can see, I'm already given the sales amount. I'm already given the cost of sales, the cost profit. So this is the information I'm already given. So now what I need to do, I need to classify my other operating income. Now with other operating income, there's no need for me to recognize bad debt recovered as well as sundry income because these are highlighted. I need to classify other incomes as well as other expenses, right? So the only focus on this income statement is going to be on classifying incomes as well as expenses. As you can see, the other information was given here, including here at the bottom, right? Now, let us try and go about classifying. Let us first start with our incomes. So from the list of balances, I'm going to try and identify the incomes that I have. So I have my rent income. And then now here, I have commission income. So based on the information I'm given, the only income so far that I can classify, it's rent as well as commission income. Now let me go and write that on my answer sheet. So I have rent income. I also have commission income. Now, let me classify the respective balances I am given. So my rent income, the balance is 258,300. Now, I am given my rent income as 258,300, right? And my commission income, as you can see here, it's highlighted with a question mark, right? But first, let me see if there's any information relating to rent income on my additional information. Now, this is my additional information. Now, the transaction that relates to rent, it is this transaction right over here. So basically it says the rent was increased by 2,700 on 1 July 2023. Rent is received 1 month in advance, right? So remember, when rent is received 1 month in advance, or any income that is received in advance, we need to subtract that income because why? It's for the next financial year. So in this case, it simply means that we received the rent for March. And remember, our financial year ends on February. So we need to classify, or rather try to calculate the rent for March so that we can subtract it on our overall rent amount. So first step, I'm going to start by doing my timeline right over here. So my financial period starts on March. And remember, I said we received rent up until this point, March, and our financial year end is on February. So we need to subtract the rent for this month, which is March, right? Now, based on this information, I'm also told that rent was increased by 2,700 on 1 July. Now, at this point, this is my July. Rent was increased, or from this point, rent was increased by 2,700 rands. Now, based on this information, I need to try and calculate my rent for March. Now, let me look at the total rent amount that I was given on my income statement, or rather on my list of balances. Now, the rent income amount that I'm given on my list of balances is this 258,300, right? So my rent, 258,300. This is the rent amount that I'm given. Now, with this information, I'm going to try and calculate the rent amount for March that I need to subtract. So how would I go about doing that? So first, I'll need to recognize, or rather, I would need to calculate my total increase. Right. So this is the first step. Let's try and calculate the total increase. So we know that the rent increased by 2,700 as of 1 July. Now, for how many months was this increase present? So it's from July, August, September, October, November, December, January, February, up until March. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9. So it was there for 9 months. So I'm going to multiply this amount by 9, right? So 2,700 multiplied by 9, punching it into my calculator, my total increase is 24,300. Now, after this, what would I do with this total increase, right? So this is step 2. I'm going to subtract this total increase on my overall rent amount, right? So I need to subtract total increase on my rent amount. Now, the reason why I'm doing this, I'm trying to find out what was the rent per month before it was increased, right? So basically, we're trying to determine the rent per month before the increase. Now, our total rent is 258,300, and we need to subtract the total increase of 24,300. Now, 258,300 minus 24,300, punching it into your calculator, you would get 234,000. Now remember, we're trying to get the rent per month before the increase. So I'm going to divide this amount by the total number of months we received rent for. Now remember, we received rent up until March, right? And then our financial year ends on February. And up until this point, February, it's 12 months. But plus the additional 1 month, the total number of months, or you could just count them on this timeline, that would be equals to 13, right? And now, after we've divided this amount by the total number of months, we're going to get what was the rent per month before it was increased. So this divided by 13. So the rent per month before the increase, it was 18,000 rands. So meaning that the rent from March, April, May, and June, right, from this point up until this point, the rent per month was 18,000. Now, as of 1 July, we said the rent was increased by 2,700. Now, remember, we're trying to determine the rent for this month, right? And already on the month of March, there was already an increase of 2,700 because we said from this point, right, up until March, which is the last month we received rent for, there was an increase of 2,700 rents per month. So to determine the rent for this month, we're going to say, okay, the 18,000, which is the rent per month before it was increased, plus the increase of 2,700. And punching that into your calculator, the rent for this month is 20,700. Now, same applies. The rent for August was 20,700. Also, July 20,700. For all these months after the increase, the new rent was now 20,700. And remember, this 20,700, we need to subtract it, right? Because this is income that is received in advance. So let us go about doing that. So here, this was 20,700. And remember, this was for rent received 1 month in advance. So let me go and subtract it on my income statement. So this minus 20,700 and punching it into your calculator, right? So your total rent, which is adjusted, it should be equals to 237,600. Now, moving on to commission income, let me see my information relating to commission income. So first, let me just try and erase here. So this is the transaction relating to commission income. It says commission income for the year has been received in full at a rate of 4% of the total sales revenue, meaning that to find commission income for the year, we need to find how much was our sales and we need to multiply them by 4%, right? Now remember, the sales amount, it was given on the answer sheet. Now let's go and identify the sales amount. Now this is the sales amount that is given, which is 20 million and 35,000, right? So here we're just going to say 20 million and 35,000 multiplied by 4%, and then we're going to get our commission income. So punching that into your calculator, your commission income should be equals to 801,400. Right. Now let us go and recognize the amount. So our commission income is 801,400. Now, so far, based on the given information, these are the incomes that I have classified. Now, let me try and see that on the additional information, I can't find any other incomes, right? Now, most of the times, what would be those additional incomes in which you will not be given, right? So first, you need to see right? So let's start first by classifying our provision for bad debts. For bad debts, right? Now, provision for bad debts can either be an expense or it could be an income, right? So let us try and see information relating to provision for bad debts. And next, let us try and see if there's any information relating to trading stock. Now, remember, with regards to trading stock, you can either have a trading stock deficit, which could also be an expense, or you could have a trading stock surplus, which could also be income. Now, can you see that these two transactions, they can either be incomes or expenses, right? Now, let's see if we have any information relating to these two transactions. Now, going to my additional information, or let me start off on my list of balances. Okay, my provision for bad debts, I have my provision for bad debts, which is the last year amount, which is 24,000. For this year, I'm not given. Let me see if there's any additional information relating to provision for bad debts. So information 3, it says the increase in provision for bad debts by 6,500 was not recorded. Now, remember, with provision for bad debts, this is the money you set aside in case some of your debtors don't pay you, right? So if this money that you have set aside, it has increased, this is a bad thing because now you are expecting more people not to pay you. As a result, an increase in provision for bad debts would always be an expense. Now, when this provision for bad debts decreases from last year, this simply means that now you are expecting less people not to pay you, which is a good thing. Hence, always when a decrease in provision for bad debts occur, we would recognize it as an income. In this case, this is an expense. And remember, we are looking for possible incomes, right? We are not yet on the expenses. We still try to figure out what are those incomes that we have to add on the income statement. But for now, let me just go and recognize this increase in provision for bad debts. So here under my expenses, I will just say, now my provision for bad debts amount, it has increased by 6,500. Now let me see if there's any information relating to my trading stock. So on the given balances, right, my trading stock, it's 982,400. This is on the given balance. Now on the additional information here, so let me see this transaction related to trading stock. All right, here is the physical stock count information. Now they say, okay, after conducting the physical stock count, these are the following balances. So in accordance to the physical stock count, right, our trading stock is worth 923,200. All right. Now remember, with trading stock, it can either be a deficit or a surplus. And remember, if it's a deficit, it will be an expense. If it's a surplus, it will be an income, right? Now let's see if there's any other information related to trading stock. Now here they say electronic equipment was donated to a local children's home. The gross profit of 22,400 has been forfeited on the stock had it been sold. Now, meaning that this electronic equipment is trading stock. Because remember, trading stock are those assets that you sell to your customers, right? And they said, okay, here, if we were to sell this electronic equipment, we would get a gross profit, right, of 22,400. Now, the markup on this item is 35% on cost. The bookkeeper has not yet recorded this. Now, here, because we have donated trading stock and this transaction was not recognized, we need to adjust this balance here on the books, right? So we need to subtract those trading stock that we donated here, right? But we have the profit, and using that profit, we need to try and calculate the cost of that trading stock. So let us go about doing that. Now, the profit, it's the 22,400. Now remember, they also gave us the markup. What is the formula for your markup? When you take your markup, and you add it to your cost, it would always be equal to your selling price. In this case, this markup is 35%, and your cost would always be 100%, meaning that our selling price is 135%. So here, I would say, right, multiply it by this, by what I want always stays at the top. What I have, it must always be at the bottom. So here I'm looking for what? The cost of this trading stock I've donated. And I said cost is always 100%. So I'm going to put the 100 on top. And here, what do I have? I have the profit that we forfeited. And profit here is represented by your markup, which is 35%. So I have 35. So when I punch this into my calculator, I would get the actual cost of this trading stock. So 22,400 multiplied by 100 over 35. This trading stock was worth 64,000. This is the cost of the donated trading stock. The donated trading stock. Now, okay, let me just try and clear everything here. Now, remember, I said on this balance, we need to subtract the cost of that trading stock that we donated. So here I would say 982,400 subtracted by 64,000. And you would get an amount of 918,400. Now, this is the adjusted amount. So now, after this, right, after you have identified the balance that you've given, as well as the physical stock count balance, and any other transaction which affects your trading stock. In this case, our adjusted balance on the book is 918,400. And in accordance to the physical stock count, we are supposed to have trading stock worth 923,200. So we need to compare these two values. Now, here in our books, as I've said, we expect our trading stock to be worth 918,400. But when we do the actual count or the actual physical stock count, we found out that actually our trading stock is worth 923,200. Now, in this case, there is a surplus, right? So there is a trading stock surplus, and this trading stock surplus, which is the difference between the two amounts, needs to be recognized as an income, right? So in this case, we have a trading stock surplus. And how do we go about calculating the surplus? So it's the 923,200 minus the balance in our books. So 923,200. And our trading stock surplus, it is 4,800. And this trading stock surplus, we need to recognize it as an income on our income statement. So here, say trading stock which is 4,800, right? So we have our trading stock surplus as 4,800. Now let me see if there's any other information relating to my incomes that I could recognize here. Right, so based on this information, those were all the incomes, right? Now I need to try and recognize my operating expenses. So first I'm going to start with the information that I'm given, right, or my given expenses. So let me go about doing that. So I already started. Okay, I recognize my increase in provision for bad debt, so I'm fine with that. So let me see here, what else? So I have director's fees as my expense. I have my audit fees as my expense. I have my stationery, right? And my dividends on ordinary shares, dividends are not expenses, right? They're part of equities. So, okay, so far these are the three given expenses I have, and let me go and recognize them here. So first thing first, I have my director's fees. And how much are those director's fees? So the director's fees were 1,307,840. And I have my audit fees at 69,720. I also have my stationery as 68,300. Also, remember, I donated trading stock, right? And always your donations would form part of your expenses, right? So I need to recognize my donation, the cost of that trading stock I've donated, right? So here I also have donations. Now, what is the cost of that trading stock I've donated? It's 64,000. This is the cost. So my donations, I'm gonna recognize them as 64,000. Now, let me see information or additional information relating to my director's fees. Now, this is the information relating to my director's fees. They say, okay, the director's fees of, so the fee was 385,520. They said this fee, which was a half-yearly fee for Mr. Jabu, the sole director at the beginning of the financial year. Now, this is important. At the beginning of the financial year, and this was for half-yearly, meaning that this amount, it was for 6 months, starting at the beginning of the year, right? An additional director appointed on 1 September 2023 received the same fee as Mr. Jabu, right? Meaning that they were earning the same. Now, directors' fees increased by 8% on 1 May rather 2023, and both directors have been paid their fees for March 2024, right? Now, remember our financial year ends on 28 February, and now we have paid these directors up until March. Now, this is what we call prepaid expense, right? Because we have paid them extra, and that amount we have paid them for March, we need to subtract it, right? So our main aim with this transaction, let me highlight it here, or rather let me state it here. We need to subtract the fees we paid for two of them, for both of them, right? We need to subtract the fees we paid for both of them for the month of March. So this is what we're trying to do. We're trying to subtract those fees for March for both of them that we paid them for the month of March, right? Now, let me try and do that. So first, I'm going to try and see how much were they earning, right? Or how much was the director's fees on March. This is what I'm trying to determine. So I'm going to do that using my timeline. So every time whenever you've given an increase or decrease, right, whether it's in terms of a percentage or an actual amount, just know that for that type of a question, you would need to draw your timeline in order to answer it. So now I'm going to draw the timeline for the 6 months. Why? Because this amount I am given here, it's for 6 months, starting at the beginning of the year, right? So at the beginning of our financial year. Now, remember, our financial year starts on 1 March and it ends on the 28th of Feb. So this amount, it's for 6 months, starting at the beginning of the year. So I'm going to draw a timeline for it. So it starts at March. Now, this is the 6 months timeline. Now, based on this information, the information further states that there was an increase of 8% starting on 1 May 2023. So this is March, April. So from May, from this point, there was an increase of 8%. Now, what can I conclude from this information, right? Now, this simply means the director's fees at this month, which is March at the beginning of the year, initially they were 100%. Now, same applies for April, they were 100%. But at this point, as of May, they were increased by 8%. So meaning that from now on, they were 108% each and every month. 108. 108%, right? So after this month, our director's fees were 108%. Now remember, I'm trying to determine how much were the director's fees for March. How much were we paying each director on the month of March? Now remember, if our director's fees have increased as of this month, which is May, right? It means that on March, which are the director's fees we're trying to determine, there was already an increase on this month. So meaning that the director's fees for this month would also be 108%, meaning that it would be equals to the director's fees on May, June, July, as well as August in this case, right? So meaning that if I can find the director's fees for any of these months, which are 108%, automatically I would find the director's fees for one director on March. Now, let me go about doing that. So now I will say, all right, I have 385,520 multiplied by what I want would always be at the top. What I have would always be at the bottom. So I want 108 because I said if I can find 108, I would find the rent for March because in March there was already an increase of 8%. Now, how much do I have in terms of percentages? What is this 385,530 in terms of percentages? So remember, I would add all these percentages on my timeline. So it's okay. I have 200s, which is this and this. So 200 plus 108 multiplied by, so this 108 is for 4 months, which is May, June, July, August. Right? So 200 plus 108 multiplied by 4, in terms of percentages, this is how much I have. So I have 632. And now when I punch this into the calculator, I would, because remember this 385,520, it's for one director, meaning that the information that I'm calculating here, it relates to one directors. But luckily, they are both earning the same. So the final answer that I would get, I would just multiply it by 2, which would represent the amount we paid for these two directors for the month of March 2024. So now punching this into my calculator, 385,520 multiplied by 108 over 632. Each director, they were earning, or rather we paid them on March 65,880. And because there were two, I'm simply going to multiply this amount by 2. And this is the total director's fees we paid for March. So answer multiplied by 2, 131,760. This is how much we need to subtract, right? Which was the aim or what we were aiming to calculate, right? So for this director's fees, I said this is okay. This is prepaid expense. And how much is that prepaid expense? It is 131,760. So let us go and subtract this amount on our director's fees. So here I need to subtract 131,760. So basically 1,307,840 minus 131,760. My adjusted director's fees are now 1,176,080. Right. Now, this is all for director's fees. Now, let's move to audit fees. Let me see if there's any information relating to audit fees. Now, information 2, here, let me highlight it. So this is the information relating to my audit fees. And it says only 2/3 of the audit fees were paid. The balance will be paid on March 2024. Now, even though we are going to pay the balance on March, which is next year, for the mere fact that this expense it's for this year, we need to recognize all this expense this year, right? All the balance that we owe for audit fees need to be recognized this year, even though we're going to pay some of that balance next year, right? Now, let's go about doing that. So I have audit fees of 69,720, right? 69,720. And they told me that only this is only 2/3. This is only 2/3. Now the balance would be paid next year. So basically, I need to add that balance that would be paid next year because we recognize transactions when they happen, not when the actual cash flow occurs, right? So now to find, I'll just say, okay, 1 minus the 2/3. This would give me the balance in terms of a fraction. Now the balance that we need to add is 1/3. Right? So I'll say, okay, this is how much I have multiplied by what I want always stays at the top. I want 1/3 of this amount. What I have stays at the bottom. I have 2/3. So let me punch this into my calculator and get the amount that I'm supposed to add. So the amount that I'm supposed to add, which would be paid next year, is 34,860. Because remember, these balances or the balance of my audit fees, which is 2/3, it represents the audit fees that I've already paid. This is how much I am supposed to pay now, 34,860, right? So I'm going to add it there. So this plus 34,860. Now, when you add the two amounts, you should get your audit fees total as 104,580. Now, lastly, stationery. So here we be given the balance, but here they said the actual stationery that we used for the year amounted to 58,520. Now this is the expense. This is the stationery. This is part of your expense, right? Because why? Now the balance that we be given on our list of balances, it represents stationery, which was there, right? Now the expense is represented by the actual stationery that you used, right? This is the stationery we used, and this would be our expense with regards to the stationery. So here I need to recognize this 58,520 as my expense. So this is 58,520 as my expense. Right? Now, the difference between these two, 63,300 and 58,520, it will be the stationery on hand. And now remember that trading stock on hand represent my current assets, or it's going to fall under my current assets. So here, I'm just going to get the difference between the two, 68,300 minus 58,520, which is 9,780. Right. And this would be all for this video, right? So this is what was expected from you. So we have recognized all the income, or all the possible incomes for these examples, as well as all the possible operating expenses. Right? Now, that'll be all for today. Enjoy the rest of your day.